We are in the midst of a price rally for the price of gold, and I think that it's a rule that we talk about rallies as they happen, so I'm not going to surprise anybody. Let's talk about the price of gold. All right, so if you were just going about your day, minding your own business, and noticed that gold got a little bit more expensive all of a sudden, well, it's because Jerome Powell showed up and he conceded that smaller rate hikes are likely. It could even begin in December. And it's one more look at what happens when investors think that we're getting that pivot, even if it's not actually a pivot. And it's not. This is more of a softer touch. Now, 2 weeks from now, we get a lot of information. On December 13th, we hear what the next inflation report looks like. And then on December 14th, we get the Fed's rate hike. If inflation comes in lower than expected, it's probably safe to say that metals prices are off to the races because we already have the signal from the Fed that it's likely that they'll start slowing rate hikes down. So if inflation numbers support it, that slower rate hike probably starts this month, December 14th. But if inflation comes in higher than expected, which I'll admit would surprise me, well, then we could see the market sell off and metals prices correct down. Either way, though, we'll know soon. Another thing to consider here is that when we do get the move this month, 2 weeks from now, it's not going to simply be a short-term move, since this is the last rate hike until February of next year. After that, Fed gets another go at it in March, and then not again until May. None of this means that metals prices are going to the moon, at least I don't think so. It more likely means that those Black Friday deals could look a lot better in hindsight. In other words, these might not be huge moves. We might not be going to $3,000 yet. This kind of look at price movement, it's really just about trying to time purchases a little bit better and then looking out of ways to get a gauge on gold's continued relevance. In December of 2021, I gave my price prediction for gold. I know, haha, but I was saying that by the end of 2022, I wasn't really expecting a lot of movement. And I knew at the time that was just a total stab in the dark. I just didn't think gold would find a significant and sustained push for this year. I thought we'd see a narrow trading band. And just to give us all something to make fun of, I said that I assumed gold would end the year 2022 fighting against $1,800. And I gave a very specific price prediction. I mentioned $1,783. I think I just made that up on the fly, off the cuff, but basically that's within 1% of $1,800. Now, if that number ends up to be accurate, well, I guess I'm a genius, beautiful mind kind of stuff. But looking at the likelihood of these softer rate hikes, I think my carefully considered prediction is probably going to be wrong. And I'm kidding here, of course, if that isn't clear. If the number actually does end up being accurate, it's more likely that I missed by so far that I made it. Really, the takeaway here is that it's been a pretty quiet year for gold, and that part I think was pretty easy to forecast, even with what happened earlier in the year with the invasion. Obviously, nobody could have predicted that, but it really is going to take that larger pivot from the Fed to see real sustained movement. What we'll see in a few weeks, that will not be an actual pivot. At most, that'll be a tribute to a pivot. But we've seen these spikes in gold prices on rumors and mild policy changes. So if a 3 to 5% change in spot price is a big consideration to what you're doing, I think there's a good chance that we're going to see something like that in a few weeks. It really depends on what actually happens on the 13th with inflation numbers and the 14th with the actual Fed rate hike. Now, my guess, and the guess of about 79% of currency traders, is that we'll see a 50 basis point hike. And that is a step down. 50 point, it's less than 75. Now, if we see a 25 point hike, that's when the prices of gold will really take off. Presumably, at least. The part of this that I find a little bit hard not to question is the market reaction. Because anytime we're seeing gold prices jump, we're seeing the market jump as well. And the joke here is that the recession is canceled. And it's one I think everybody gets. We will not see a sustained market rally on one lighter than expected rate hike. And is this where I remind everyone that I'm not a financial advisor? Because I'm not. Jerome Powell has been telling us some of this, though. The other part of what he's saying is that we may need to continue increasing rates longer. And that means that we might see softer rate hikes coming out of these sessions, but rate hikes will likely continue and push the federal funds rate to 5% rather than the earlier 4.5% estimate. Currently, I think we're between 3.75 and 4%, by the way. And that means that a true pivot, it's further off. So while we might see these short-lived market rallies and say 3 to 5% price jumps in gold, we probably won't see big changes until we get that real actual pivot. Now, there's a lot of talk in the financial news about soft landings and narrowly avoiding a recession and ignoring the part about being in a recession already. If we hadn't changed the definition, at least, it seems like it's a general story of just not making sudden moves. No big rate hikes, inflation coming in just slightly lower than expected. So it's hard to think that we're going to see an overnight move to $3,000 gold or $50 silver. The more likely forecast puts gold pushing all-time highs in 2023, but that's in the $2,000 vicinity. The $3,000 forecast that we hear about, that usually assumes that the Fed has declared some kind of victory. It doesn't mean that inflation is under control. It doesn't mean that it's back down to 2%. It just means that the Fed is backing off on their efforts to control it. And really all that takes, because that gives investors a completely different view on risk on assets, and I guess a different rate of return on bonds, which is really at the center of all this to begin with. If you are waiting on $1,500 gold, though, I just don't see a path to that kind of drop at this point. I mean, anything's possible, I guess, but I think we've turned a corner on what to expect for gold prices going forward, even if that only means that we don't seem to be waiting for a big sell-off. Okay, so let's call it good there. Here is your chance to get your end of year gold price forecasts in. I said 1783, but in my defense, that was 12 months ago. We'll keep it for fun though. I know how serious these price predictions are. Let us know what you think. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.